Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex, indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
What's going on, guys? It's Brinks Trades coming to you live with another week of breakdowns. Hope everybody's having a good week. Just wanted to come on here. I know I was supposed to be on here earlier, but we were having some technical difficulties with the stream. So hope everybody is having a good weekend. Shout out to Tony. Always on here as usual. Newly in the mentorship. So I'm happy. I had a chance to talk to him yesterday, and he's killing it, man. He's getting withdrawals and everything. So definitely love to see that. Hey, how's it going? I feel like I might pronounce your name wrong, but Nebras. Hopefully you're having a good day. Hopefully I said your name right. But yeah, so anyway, so I'm Brinks Trades, aka the resident indices analyst for the Trading Up podcast. So every week I come on here and I just break down charts to get a better understanding of where we think the market's going to go for next week. So a little bit of background about myself. I've been day trading for a decade. So I started this journey in 2015, started in Forex, moved to indices, and now I'm kind of in a space where I'm just kind of balancing both, right? There's some days where I look at Forex markets. There's some days where I trade futures. And so I really just, kind of branded myself as a trader, right? So want somebody that could trade anything. So I think that's how it is. And, throughout your career, you're going to go through a bunch of different market phases. You might trade, Forex one year, you might trade indices the next, you might trade, different market. They're all going to have different ups and downs. And as our job as a trader is really just to find the volatility, right? And trade that. So, okay. She said, I passed my FTMO challenge phase 2. I don't know if you're a mentorship student or if you are or just someone's been following, but either way, that's awesome. I think FTMO means that you're outside the US because I know they're not open to US traders anymore, but that's awesome. I wish FTMO was still an option here in the US. Man, honestly, if Forex firms were still a thing, I probably wouldn't even trade futures, but that's just me. You gotta adapt, you gotta move with what's going out there. But that's awesome. How big was the account? And hopefully, you get a bunch of withdrawals in that account and make a lot of money. So Harry says, hello, I need chart breakdown for NAS100. So yeah, we're definitely going to tackle that in a second. But yeah, so what I do is I come on here every week and I look at a few different assets. I told my students this week that I was going to actually add gold to the watch list just because everybody knows how I feel about gold. If you're watching me on here, I'm not a huge fan of it because it only moves during economic uncertainty. But right now we're dealing with economic uncertainty. So we got to, take a look at it. And so I'm going to get, analyze that along with some of the other currency futures such as pound and dollar, or pound and euro. And then we're also going to look at dollar index as usual and the rest of the indices. So let me go ahead and share my screen. We'll go ahead and get into it. I love dropping I love when people drop comments about where they're calling in from, just because I love to see where people are around the world. I know this is a global podcast. Every week we get people in here from like different parts of like Africa, Australia. Obviously, Cam is based in Australia, Europe, right? So this is really cool that everybody's logging in at a certain time. So, so yeah. So let me go ahead and share my screen. We'll go ahead and get into it. So, if you guys know, I always start with dollar analysis because I want to get a better understanding of what's going on. So I'm actually going to clean these charts up a little bit, and we'll kind of walk through this, right? And so coming to the terminal last week, we wanted to see the market really continue to go lower. And I think we started the week here, right? So coming into the week, I wanted to see the market really take out this level here. And if you go back and watch last week's episode, oh, let me change my charts because I got a request last week, so people didn't know what chart I was looking at and analyzing. So I'm going to keep the watermark up there at all times. Wish I could move it a little more because it's kind of in the way. But let me see if I can change that a little bit. Make it a little less apparent. So DXD1, DX1 dollar index, basically the dollar time frame. So what we wanted to look at, actually, I'm sorry, I'm playing with this, and y'all know this is live, it's not recorded, so I'm playing with this in real time. Make it a little bit more opaque. So coming into the last week on dollar, what we wanted to see here was the market really continue to go lower, right? We're looking at this area of sell side, right? And we thought the market really could run through this. So our job is really to see if the market could take out this level, especially since we're heading towards liquidity. And so we ended up doing that, and we were looking for lower prices. This week, we actually ended by trading back into this volume imbalance right there. I'm going to make that gray so you guys can see that. Boom. So what am I looking at this week, right? So one of the things that I try not to do is try to catch a falling knife, right? And so when we talk about the idea of, reversals in the market, like obviously we hit a level. We always have to look and see if this is the level that price wants to ultimately reverse at, right? Our ultimate draw on liquidity. But, one of the things that I'm looking at for this week is for price to really trade back up into these imbalances. If you look at this price swing here from our low to our high, I would love to see price really trade back into equilibrium, or that 50% range, which will be up in this zone right here. So I'm going to look at this. Also, there's a few kind of things here. There's an old order block that sits right here. I'm just going to make a line that says, it's a pretty thick line. Oops, let's do that. And I'm just going to label this weekly order block up here. This is kind of like a breaker setup where price, violates an order block and then comes back and retests it. So ideally, I want to see the market trade back up into this range. It could go as high as this level here. I'm okay with it trading up into here, but this is just probably the most optimal range. Libra said, I'm from Denmark. Oh, that's awesome. See, we got people around the world, right? So like usually there's people from like I said, Africa, Asia, Europe, all that stuff. So it's pretty cool to see. So anyway, so going back to the charts, I would love to see the market trade up into this range. If it does trade up into these two upper fair value gaps here, I'm going to outline these, but I'm okay with it doing that. I'm okay with it trading into these imbalances here. Ideally, I want to see the market go into this range. And then trade lower, but ideally I'm looking somewhere around this range for like the most optimal range, this fair value gap or this fair value gap. So there's a chance that we've been extremely bearish, that we could just keep running. But for me to want to look for a good pullback on a trade, I would want to see a trade back up into here. If we start to take out, jumping down to the 4-hour time frame, if we start to take out highs, then maybe there's a counter trend opportunity that'll present itself trading back into the range. But as of right now, I want to see this play out like this, where we start retrace back into this gap to start the week off and then go lower, or the second one or third one as well. But ultimately I think if this second one kind of gets violated and we start heading towards this third one, then that's not going to be a reversal that's going to happen this week. It's probably going to be the weekly move. So ideally, that's what I'm looking at on dollar index. So we know if our dollar index is going to be bearish, then we want to see euro go up, GBP go up, etc. Right? So let's go ahead and look at that and see what we got here. So I'm gonna do something different, right? I'm gonna pull up Euro USD. I know we got some global people on the call today, so I'm gonna do Euro USD instead of indices. So naked chart again. So kind of where are we at, right? So clearly in an uptrend. There's a couple levels that I'm looking at. So there's a couple things that we violated, right? So we violated a couple of sell side imbalances, right? Fair value gaps. So what is that letting us know? That's letting us know right then and there that we're bearish, or that we're extremely bullish, right? In a downtrend, we're going to violate old civvies. I'm sorry, in an uptrend, we're going to violate old civvies and then, take out old highs. So this past week, we ran just shy, I think, or did we take it out? We took out this high right here. But there was buy side. So that was our long-term target that we wanted to see it hit. So what am I looking for now, right? So I can't, again, very similar to dollar. I can't say that this is the high and we're going to reverse off of this, right? Because especially when we're having such a strong week that we're coming off of last week. But what I can say is that there's a strong probability the market's going to want to retrace back into this old fair value gap, right? And so we have a couple of situations here. We have an inverted fair value gap. We also have this BISI here. So the secondary fair value gap right there, right? As well as a break in market structure, like a clean break in market structure. Technically, you could have considered maybe this high a break in structure, but this is a very clean break in market structure. This is letting us know that the market wants to go higher, right? So what do I want to see? Well, I would love to see the market really start off by trading back into this range and then taking things higher. The cool thing about the Forex markets and the currency markets is that when March hits, like that March-April timeframe starts to hit, you start to see a lot more volatility pick up in these markets. And combine that with a lot of policy changes in the US, I think we're going to see a lot of volatility going on there. So I want to see the market really run higher, especially after taking out this high. But ultimately, I want to see it trade back into this gap somewhere. We start to look at ranges again. You can see that the market could trade back to a perfect scenario, trade back to equilibrium. We could take things lower, but I'll really be looking at that 4-hour time frame to give me a good understanding of what we should be expecting for this week. I would love, in an ideal scenario, jumping down to the 4-hour, that we don't even go that low, right? Especially since there is this very big gap here, very not big but noticeable fair value gap here on the 4-hour that I want to see the market trade into. And so if we respect this, then we're probably going to keep going higher. If we don't, then we'll probably get that deep run back into these old imbalances here, which I think ultimately is going to happen at some point anyway. So we'll see what happens. But I would love to see this continue to go lower and then eventually come back up here and take highs out. So we'll look at the calendar before the day is over just to see what's going on and see if there's anything that can cause us to really trade into that. But ultimately, target was hit very early this week. Actually, yeah, this week on Tuesday. We took out that high, which was that long-term level that we wanted to see taken out. G said, hey, what's going on? Is there a chance you could look at Euro CHF of love from South Africa? Yeah, I definitely want to look at Euro CHF. I'm going to take a look at that in a second. So I'll add that to the list for today. So yes, that's GBP or USD. Let's look at GBP. Again, very similar situation going on here, where we hit a high. We actually wanted to see the market, and I'm going to clean these off and just kind of erase off everything on here. If your mentor does not have dirty charts, anytime you see him, that means he's not really trading. So get a new mentor. So yeah, so one of the things that I'm looking at here is there's a few levels. Obviously, we've been on a bullish run. We took out liquidity at this old high here, and then we're heading towards this one. I wanted to see the markets go up here, and I was telling my team in my mentorship group yesterday that I wanted to see the markets continue to go higher. So it could be a situation, seeing as we didn't take out this level on pound, but we did take it out on euro. It could be a situation where we could, very early into next week, run up and take the high out and then trade back into this range here. So we could do something like this, right? Or this is just being held because we want to dig into these imbalances first and then go back up and take that out. So again, not too sure, but ultimately I do see us trading back into this range to go higher at some point. So what I'm seeing right here though is us on pound respect these order blocks here that are coming in at 1.29 or 19. So ultimately we've been respecting this for the last couple of days, trading off of it. We've even been getting, if we look at consequent encroachment of these wicks, we have been respecting that perfectly and have not really been trading or closing anywhere below that. It lets us know that we're still a bit bullish. We also have that volume imbalance there that we could trade up into. So ideally what I want to see here, jumping down to the 4-hour time frame, we have that trend line liquidity built up as well. Again, my students know what that means. So if you guys are seeing that, that's a good sign for bullishness, especially when it's counter trend. Ideally, I would definitely want to see this market continue to go higher. Now the question becomes, do we drop lower to take this, come back up and take this early in the week, or do we take this out early in the week and then spend the rest of the week trading back into the range? I can make a case for either or. I do just believe that we will be having an opportunity for things to go bullish. If we did drop lower, I would not mind price trading back into this fair value gap here, finding some level of kind of like quote unquote support at 1.2908 and then trading higher, at least back to the high of last week. If we got an extended run, it would be up here. I think this is 110 pips out. So this could be a good run. So I love seeing the markets, the Forex markets get volatile again, because this is the fun time of the year. So second quarter is really the time where you see a lot of volatility kick back up for the year for FX. So it could be a really fun time. So let me go back to the comments. I don't see anything for you guys so far. So let me jump here, and I'm going to make my screen a little bigger by doing that so we can get these there. So it's GBP, right? So again, if you're trading pound futures, it's going to be 6C or 6B1, right? So same chart though. I pull it up, same thing. But let me go back to pound. Someone asked to look at Euro CHF. So we'll look at that and then we'll look at gold. So I've never traded Euro CHF. I'm actually on the hunt for more volatile Forex pairs or currency pairs. So the ones that you're trading right now are, I'm trading mostly majors right now and currency futures. So like pound and euro, obviously are the ones that I'm looking at, but really want one that's going to move a lot of pips. I know that every market goes in cycles. So like back in 2015, when I first started trading, euro would move like 200-300 points a day or pips a day. It would move crazy, right? And like the way that NASDAQ moves now, or maybe like the way the S&P moves now, is the way that euro was moving. And a lot of that had to do with Brexit. It had a lot to do with like the market conditions that were going on when I first started trading. But really, as of late, I mean, the markets have really only moved about 60 or 70 pips per day, which is not too great, but it also lets you, less volatile markets let you think your way through the trades. So it's not all bad either way, right? A lot of times you trade NASDAQ, you trade those faster vehicles. It's like you're on a roller coaster. So Euro CHF, right? Let's look at this really quickly. So I don't trade this one at all. So I really want to if euro is going to go higher, this is going to lead. This is going to follow with euro. So I would expect that this would also go higher as well. It's pretty much lining up with what we're seeing on euro. We traded back into this imbalance here on the weekly time frame. This for weekly fair value gap, right? We traded into it once and then mitigated it. So ideally, this is kind of a situation where you want to take a step back and see what you're getting in this range. We did close above consequent encroachment, so it's leading me to the idea that we could continue to go higher. The thing I don't like is that we had 1, 2, 3 hits to the high and then really still close above CE, but did not break through this gap. So it could be, even on the daily time frame, we kind of wicking off consequent encroachment. So I don't want to say this is not going to go higher, but what I would be looking for is how we treat this. How we treat this secondary imbalance here. If we find ourselves closing below this, then I'm looking for the market to run here. I also don't want to buy this because we're trading into a fair value gap. So when it comes to these gaps, yes, you can buy in them if your higher time frame bias is going to be higher. Like maybe we think the market's going to run to the second imbalance or that. But ideally, what I want to see the market do is I want to see this fully invert before I go long, or try to sell the rejection off of this. So look for sell setups. Not saying that it can't break through this, but it's just technically you're trying to sell in an area where there's buyers, right? So I'm not trying to do that. So if this was me, my bias would be bullish. So I would still want to see this break through this, but I wouldn't trade it until it does. If a sell setup presented itself like this, like if it inverted this gap right here. This is 4-hour time frame. If it inverted that, then I would be looking lower. So I'll make a note that says invert, looking lower if inverted. So that's what I'll be looking for. Yeah, I've never traded CHF before. I don't even know if this thing moves in London or New York. I'm assuming that it's most of the volatility is going to happen in London. But I mean, it's some pretty good volatility there in New York. So yeah, so ideally, that's what I want to see is if we find ourselves trading below that fair value gap, then I probably will go short. But in these ranges, whenever you take out a level, a higher time frame level, or you take out an old high and an uptrend, or an old low and a downtrend, or fill an old gap or imbalance, you have to sit on your hands and ask yourself, like, and pretty much be patient, because this was your target, right? This was your long-term target. So this was hit. So now we have to see if we have a new target because of a break of structure to the downside, like we ran liquidity and broke structure and went down, or are we going to invert this and go higher? So we just need to be patient and see what the market's trying to give us. Don't ever try to force your thoughts in the market. Let the market tell you what it's going to do, and then go ahead and make that move. Let's see, 314. It closed strongly bearish. Let's see. Lee Max says 1 hour closed strongly bearish. Let's take a look at the 1 hour. So he said it closed strongly bearish. I think it's seeking liquidity higher before aiming for that 1 hour candle low. I think what you're saying, if you're still talking about Euro CHF, sorry, because there's a lag on the comments. So if you guys leave comments about that, just say like what pair you're talking about, because the comments come in a little bit later than when I'm talking about them. So I'm not always sure which one we're talking about, but I think you're talking about Euro CHF. We did run this high. We ran those relative equal highs, jumping out to the hour. And The thing that I do like for bearishness is that trend line liquidity right there. So that's that low resistance liquidity run, right? I think we could trade into, we definitely could come back into this gap. I think we're definitely coming back here. But just the question is, are we going to invert? Are we going to keep going lower? Is this the level that the market wants to seek for its ultimate draw in liquidity? We had 1, 2, 3 hits to the high, right? So I mean, this could, like, the bottom could just fall out of this. We're also obviously inside of that bigger daily fair value gap. So I can make the call for bearishness. I can definitely see how bearishness could play out, but it hasn't fully happened yet. So I just don't want to call it officially because we're still like kind of overthinking the market, if that makes sense. We're still not, it still hasn't happened yet, right? We still haven't inverted this. So there's technically no reason to sell as of yet, unless you're looking at maybe like a 15-minute time frame where we're technically in a downtrend already. But based on the higher time frames, we're still technically in an uptrend. So if this inverts, then that's going to be my signal to start looking lower. But until that fully inverts, I kind of have to stay out and wait until price does what it needs to do. So if that makes sense. So yeah, so I definitely can see how this could go bearish, right? Like I said, we ran these highs. We had 3 hits to the high. We are trading around consequent encroachment, right? Like I can see this going lower, but just, shorting things before it gives you like the full confirmation that it's time to short is how you lose money. And I've done that a lot of times. So he said UHD CHF should be going lower. Let me look at that one too. So I got time today, obviously. I know everybody's here for indices, right? But there's still a lot of Forex traders in the world. Actually, drop in the chat, right? What pairs do you guys trade the most? Do you trade indices the most, or Forex pairs, or currency futures, right? So like you could either trade, like what are your top assets that you trade? Are you an NQ guy, ES guy, a NAS100? Like what are you like? Euro USD, right? Euro futures. Like, what are your guys' pairs that you really trade on a weekly basis? Is it still more Forex based, or do you guys find yourself trading more indices? That'd be a really cool question to know. So while that's happening, I'm gonna look at UHD CHF really quickly. I have not traded this since I first started trading. This is CAD. I don't even think I have it on in my list. That's UHD CHF. Oh, here we go. Oh yeah, this is going lower. But this lines up with dollar. If I was trading UHD CHF, this lines up pretty much verbatim with what we see on dollar. This is dollar index, and this is UHD CHF. I've not traded UHD CHF since the first week, like the first month or two of me trading, and it just doesn't move that fast for me. So there's not a lot of volatility here. So it's a good pair for like if you want to trade for beginners, but it's not really something I'd be interested in. So what are we looking at here? This is our level of sell side here. You notice we are currently respecting this very, very small imbalance right there. We're also trading back into an inverted fair value gap right there. I'd never trade this, but this looks bearish as hell, right? If I was trading this next week, I would look for us to potentially come out, open up, run last week's. Wait, let me see. Yeah, run last week's high and then tank. That's what I would want to see, is the market to do something like that, trading back into that range for the second time, and then really just going lower for the week. So that's what I would be looking for if I was trading USD CHF, but this is bearish, and I definitely think we're coming down here. Now, again, your analysis should line up with dollar. So that might even let us know that this run up here on dollar might be shallow. Like we might not get an extended run up. It could just be here, or we might not even see a run. It could just come out and tank, right? We never know. for certain. It definitely has the right to just keep going. So that's dollar CHF or Swiss franc. Someone from Europe has to explain to me why is the Swiss franc CHF? I never understood that. Like, what does the C stand for in Swiss franc? Because I don't know. I'm not from Europe, and I never understood that, and I never really bothered to look it up. I'm mainly NAS, but Forex seems a lot cleaner. I think the thing about Forex is that the biggest thing, and again, I'm biased because I traded them for honestly, I didn't really start trading NASDAQ until 2 years ago, like 2023 coming up. So everything I traded up until then was Forex, right? And currency pairs. And so the reason that I loved Forex so much and still do is really for a couple of reasons. Is stuff moves slower. You have time to sit and think your way through it. Everything is not reactive. You can trade off of a 15-minute time frame, a 5-minute, a 15-minute time frame, and still not miss the move. You also, even though it doesn't move as volatile, right? But I feel like when you have less, things don't move as volatile, you have less emotions in the trade, and you can stack up, position sizes more. So like people I know people that have made millions of dollars, hundreds of thousands of dollars trading anything, right? So like, don't let anybody teach you that you need to have one particular asset class that you need to stick to be successful. Right now, NASDAQ is the popular thing. 10 years ago, Forex was the popular thing. 10 years from now, Forex might be the popular thing again, right? So don't let the internet kind of confuse you into what you should be trading. Figure out what works for you. Figure out what makes your emotions least volatile. Because if your emotions are always volatile, you're probably going to blow accounts. Figure out what you can read the easiest, figure out what works with your time schedule, and figure out what works with your capital requirements. I know Forex is kind of like I only have $100 in my account and I want to build, like that's the asset class that you can do. Or if you're trading a prop firm, right, the Forex prop firms, like especially for you guys in Europe, like those CFD prop firms, they let you hold your swing positions. Like I can't swing with Top Step. I'm funded with Top Step. I'm funded with Apex. I'm funded with my funded futures right now. And I can't swing trade any of those positions. I need to be in and out in each day. So I need to make something shake every day. I'm not a swing trader like that, but when you can see swing trading, like when you can swing trade stuff, it also gives you, well, let me backtrack. When you can do higher time frame analysis and say we can swing trade this, then it lets you have cleaner entries sometimes in the smaller time frames because there's usually a clean path to where you want to get to, so you can call out and see what you want to see every day. So yeah, so don't be scared to switch back and forth. They're all assets. At the end of the day, it's a chart. Can you read the chart? Can you trade the chart? Does the chart get you emotionally overloaded? That's the only thing you need to be worried about. I'm still learning, but normally watch the lives with Top Step. I started working with home so I could watch the markets. No, honestly, if you working from home is clutch. If you can work from home and trade, that's the best thing that that's honestly what I do. Days where I don't have to be in office, man, I'm usually charted up and trading and have a chart open. So yeah, definitely, if you're serious about trading, you need to switch your lifestyle to fit your endeavors, your passions. So I think that's one of the things that a lot of people don't talk about. Like, if you know that you want to be a London session trader, then maybe you need to get a second shift job, or you need to be able to work from home so you can do those things. Or if you want to be a New York session trader, then maybe you need to have a third shift job or a second shift job where you don't have to be in the markets, or you need to be working from home. So a lot of people don't talk about like being able to rearrange your schedule or work into a place to rearrange your schedule to actually be able to trade. So it's not always putting as much pressure on you to be able to trade. Like I have a full-time career and I'm funded. Like I've been funded over like 1.72 in futures and Forex stuff over the past couple of years. Actually, probably more than that. It's probably over the 2 million mark if you add up everything. And Yeah, I still have a job. Like I have no issues with that. But it also me know that if I blow an account, right, or if I fail a challenge, then I'm gonna still be able to eat this month. So it's cool. At some point, you do need to make the transition, but don't rush the process. Um, so yeah, so that's awesome. Um, let's see. Oops, I keep popping this up. Let's go to the stuff that you guys are all here for. Let's look at NASDAQ. So NQ, I'll do this a little different. I guess I'm on the Forex kick today, so I'll look at NAS100. I think it's interesting that NQ is sitting a little lower than NAS. If you look at both charts and you're conflicted, always look at what NASDAQ is doing. But this is like the thing about this is right now we currently are at a level that we're starting to reverse, but I still can't call bullishness. I would say if we invert this fair value gap up here, like we find ourselves inverting this and going higher, something like this, then I will try to look for longs. But as of right now, I mean, there's nothing really I can really do. Now, I will say this. I called this out to my students over the week or during this week that ES ran lower and took that low out. YM went crazy low and took that low out. And NASDAQ was held. So that divergence right there, it's called SMT divergence. Basically what that's saying is that NASDAQ might be ready to go back up. So it didn't need to go any lower and take that low out. And ES and YM weren't quite ready, so they had to take that low out. But this usually could signal a reversal if you pair it up with other things that align, right? So if we did that and then we ran that inverted fair value gap, then I would be more likely to want to see to take that higher, right? And then we would be looking at like maybe this high or this relative equal high up here. So ideally, that's what I want to see is the market go higher from this if we invert this. Right now, I would not be looking for any type of buys because just as easily as we engulfed that previous candle and went up, we easily could just tank this and go down on the next candle, right? And everybody would be asking you like, why did you buy that? Like it's clearly bearish, right? And hindsight is 2020. So what I want to see jumping down to the 4-hour time frame is I want to see potentially us run last week's high, something like this. Maybe even trade into this previous fair value gap like that, then go lower. That's what I want to see. Let's look at the ES. Yeah, again, remember if we take out this high at 19,800 and we close above this gap, I'm going to be very bullish, or at least somewhat bullish to see it. If we could take out this high up here and then potentially keep going. The thing about NQ is that, and honestly, any of these indices that they're terrible to swing. They're way too volatile to swing trade. And so sometimes your weekly levels will be very very hard to call sometimes. So let's jump in with ES. This is actually a little bit more bearish, right? So you can see the market ran into this this previous fair value gap here that we inverted, and it closed back below it. So this could let us know that we're very bearish still, that we could keep going down. Again, if we found ourselves trading above this fair value gap right here, then we could potentially find ourselves going above this. But As of right now, this still looks very bearish. Even though we took that low, it still looks very bearish. So what I usually like to do is the first trading day of the week is usually Mondays. I have a schedule for my personal traders. My mentorship group knows this, is that like there's like Monday, Tuesday, Wednesdays. Usually my trading days are going to be Tuesday through Wednesday unless there's a specific series of news events that happen like FOMC and NFP. But in a normal trading week, I usually like to see what Monday gives us to really understand what the week could look like. And if we find ourselves really disrespecting these gaps, then I might want to take things lower. So that's what I'll be looking for. But again, I'm still very much bearish. If we take out these levels here or like that fair value gap there and close above it like strongly, then it could let us know that we're going to reverse. Like we would have reclaimed this fair value gap, if that makes sense. So, but as of now, I have to go with the idea of bearishness until we see something in the markets that wants to invert. Technically, we broke structure in that 4 hour there, but not the daily. So it could happen. It's just not, this is just not the best ideal spot. So again, I want to see the market run for the low there. And if we invert again, we'll go up. That's why if you guys are part of the Discord channel, obviously I'll update analysis throughout the week and I'll change my ideas on things depending on what we get. Right now, we're seeing what the markets look like on close on Saturday. Monday, it could be a totally different ball game. You know, we could find ourselves in an international conflict and we'll shoot up 1,000 points or down 1,000 points. Somebody could say anything. There could be a new policy. You know, 2 presidents could be scrapping in the White House, right? And it could affect price, right? So we don't really know. But obviously, you know, if I will be still looking for short opportunities until we get something above these 2 fair value gaps. Lee Max said took Thursday's high and closed below the daily, looking more at lower prices next. I definitely agree. Like I saw that too, where we ran this high. We also stayed below consequent encroachment, I think, too. Yeah, consequent encroachment of that previous wick. So like, I'm still on board with the idea of bullishness or bearishness. I was just saying, like, if this closes above this, then I'll be looking for bullish prices. I can't, like, I would not be trying to buy this right now. I would not be trying to buy this. I would need strong confirmations. And even if this took this high, like me personally, I don't think I would probably even buy it. I probably would just wait to see if we ended up transitioning back to a downtrend. But theoretically, in theory, you know, if money was no option, I would be looking to buy over this. But as it stands right now, we're still very much bearish. And that was a good call out about liquidity. So we ran that high right there. This is what Lee was saying, is we took out that high, traded back into the range, respected this gap, respected consequent encroachment. This doesn't look bearish, but it's bearish. Like to untrained eye, it looks bullish, but it's still very much bearish. So we did take out all these highs up here. So ideally, if I was gonna go bearish next week, I would potentially want to see a run to last week's high. I think this was last week's high. No, this wasn't last week's high. Friday's high, and take out that low and go lower. And in the process, inverting that very, very tiny fair value gap. I know 4-hour time frame looks like a breaker setup, but until we start trading back above this, there's no way I would look to buy that. That was a good call out. I appreciate that. I think YM is the same thing. Everything here is bearish. Like I would not be trying to buy this, any of this stuff next week. This one, I mean, we were dancing above, like we consolidated right above this high. This is YM. So I guess to keep things consistent, I'll look at US30 today. So Again, YM and US30, same asset, just one for international markets, one for the futures traders. We closed a couple of things. This was the high. This was not the high of the week. So very same situation, right? Where we ended up trading into these two fair value gaps. Price held. We gapped up. Took out Thursday's high. Grabbed that liquidity. And then obviously we were extremely bearish. We didn't even try and retest that wick, right? Or that second gap up there. So what we'll be looking at this week is that we would want to see the market potentially go lower again. So potentially running up, opening up, and then going lower, inverting that fair value gap right there in the 4 hour. It's a little bit more noticeable on here than it is on ES, but I could even see the market doing something like coming up and grabbing this wick too. And then continuing to go lower. Like retesting that. So I'll be looking at last week's high. I keep saying last week's high. That was weird. Sorry, guys. I think I lost power for a second. But yeah, that was weird. Let me share my screen again. All right. So anyway, as I was saying, like I want to see the market take out this high at 515, potentially even going up to this high up here, and looking for a reversal off of that before we can take things a little bit lower and then continue to go down, inverting that fair value gap right there and taking things to the low. I think we'll definitely have a good confirmation if we invert that 4 hour fair value gap that the market wants to run lower. But again, we're still very much bearish in conditions. So my whole idea is like, what are we coming out to take? Where can we take buy side at for next week to continue to go lower? So that's what I'm going to see. So last thing I'm going to look at is, I'm from India, bro. That's what's up, man. IB SF Trader. Shout out to you from India. So we got people from all around the world watching right now. What time is it in India? That's crazy. So let's go ahead and look at The last one, I'm going to look at gold, right? I'm going to add gold to my list, my watch list. If you guys were watching last week on the call, I called this out perfectly. I said I wanted to see the market come out and retest this inverted fair value gap on the daily, and then take off. These lines were actually drawn last week. And I pretty much called this on the dot. The market came back down, retested these gap on Monday and then Tuesday, respecting consequent approach from both days, and then took the hell off. So we made a new high on gold, which is cool. I mean, some people get caught up on new highs and new lows. That's okay. It's not really a big deal. I actually think trading new highs are harder because there's no liquidity to reference. So in times like this, what I do is I have standard projections, standard deviations, and my whole trading revolves around the idea that this is a video game, right? Like trading is a video game. It's controlled by an algorithm, right? Algorithms use standard deviations. This is a little bit of sauce that I haven't even gave my mentorship group yet, but standard deviations are control, or like computer programs, if they had to measure distance, they would do it in standard deviations from the mean. So again, standard deviations of this, I would love to see the market run up to -1 or -1.5 eventually over the next, few daily swings. So ideally what I would love to see, I'd be looking at -5 first. So let's just say 30,000, 3,019 is what I would want to see. So I want to see the market trade back into this BISI for it to hold. And it looks like it will because it traded once and twice over that previous high. So trading back into this range like this, and then taking things to the high, which is -1. But that's the long-term projection. I probably would take trades at least to the high last week, but I think long-term we could get here. There's not really anything else you can do with gold other than have it trade back in its daily fair value gap and look to take things longer. So yeah, so that's what I want to see on the gold. Very clean, simple analysis. Again, this is not something to overcomplicate because there's really no other levels of liquidity here. If we invert this gap, then we could be running towards back to this low. That's a very easy sell setup. So yeah, I mean, don't overcomplicate it. It's not all trading needs to be hard and difficult. So Tony, I know that Tony loved the gold analysis there. So yeah, so I think that's all I got. So I'll stay on for any questions. I got a few minutes before I need to log off. So if you guys have any questions at all about trading in general, I'm here, to answer those and go from there. But easy, quick analysis. Hopefully you guys enjoyed that. Oh, also, I guess it's a shameless plug for the mentorship. I need to do a better job of plugging this. But, I actually have a mentorship that I work one-on-one in a group setting, I guess is the easiest way to put it, but a group setting with people who are trying to learn how to trade the markets. Again, I've been focusing a lot on currencies the past few weeks. I've also traded NASDAQ primarily also for the last couple of years, but really the mentorship centers around currencies only because I think they're just easier to learn. I think those markets are easy to learn. They're easier to understand. And, it's easy to swing trade, which means it's easy to break down into an actionable trade that you can take on a higher time frame. Or lower time frames. So what I'm going to do is I'm going to drop a link to this there. And you guys can hop on and check it out. I would say join the free chat, right? And basically what that gives you an access to is basically just the conversations that I post in any of the chats. But the real value there is the actual mentorship, right? Where you can learn how to actually learn my style of trading. You learn the way that I see the markets, how I analyze things, what I'm looking for when the markets are hitting, and um, what's how I kind of think through things, right, from the course perspective. Then we do live trading 3 days a week where you guys can come in and actually see me take trades live, not for copying purposes. I don't want you to copy my trades, but it's easier to learn my thought process seeing it live, right? So you have the strategy that you learn in like YouTube style courses. Then you have the actual live application 3 days a week, and then sometimes more. And then we also do a mentorship call on Sundays too. So you guys can ask me any questions that you have, and then get back to me with, I can kind of help you walk you through those. So I'll drop a link to that in the description or in the chat box here so you guys can see that. And honestly, like I said, I think if I had to call it, I would say my style of trading is probably like one of the easiest to understand and less stressful emotions. Stressful in your emotions than anything, right? So I'm usually looking for 1-2 setups a day. If I don't get it, I'm good. And and then call it a day, right? So let me drop that. This is the paid mentorship one, and here's the free chat. Boom. So that's the paid one, and then the free chat is just access to the free chat is here. So he's in it right now. He just actually joined, but he's been following for a long time, obviously in the YouTube calls. But he said the mentorship is a blessing. It helps with the development, also growth and awareness, right? So we're doing a lot, right? We're helping to develop traders, right? And I want to be able to have consistent, a lot of consistent traders. We've had people pass top step challenges. We've had people get paid making withdrawals on a weekly basis, right? So it's a really good opportunity to grow as a trader and really start to be in a community of traders that can, really do things. We're also the number one thing that I'm really focused on for this year is helping everyone in the chat with their emotional psychology when it comes to trading. And I think that's the one part that most traders ignore, right? So when we talk about the emotional side of trading, you can know everything, right? But once your amygdala hijack kicks in, or your brain, you start, you lose control of your emotions, then you start doing dumb things, right? And so our whole strategy from a mental edge, and really building that mental edge, is getting the trading down to a science where even you have a defined chart edge, you have a defined time edge, and then your mental edge as well. So you can manage your mind as well as managing your trades. So we don't have those moments where we blow up on the charts. So there's a lot of resources that are putting in the chat that I've taken from other places. I'm also most likely going to have a trading psychologist on deck for you guys, based on my own personal journey working with this guy. He's a really good guy that has worked with millionaire traders in the past. So there's a lot of resources here that are going to be coming this year, and so I really want to make this not just a course, but really an education platform. So that's the link if you guys want to actually join the mentorship. It's a 7-day free trial on that. So on the paid mentorship, but then also if you want to just join the chat and see what's going on in there, this is the free one where you don't have to pay anything. So let me show this, and I'll drop that in the chat as well for you guys as well. So but yeah, if you guys have any questions at all, hit me up on social media at Brinks Trades, and I would be happy to answer them. And hopefully you guys get as much value out of this as possible. So again, I'm staying on for any questions. But and these could be general questions. These could be trading questions with anything. I got a couple minutes, so hopefully you take advantage. If you want me to look at any other charts, this would also be a good time to do that too. So we got 40 people on. So, if you guys have any questions, again, this is a good time. I'm not gonna force y'all though. So not perfect, just dope. So that's a dope name. Dope YouTube name. Said, do you view charts in free chat, or is that just in your mentorship? So what I do, and I'll pull it up for you guys so you can see. I'll show you guys. If I can get off of this page, Discord. If you guys can't see my screen in my Discord, I'll show you guys right now. I'm in a bunch of Discords. Some because I want to be in them, and some of them because I just want to see how they're set up. But anyway, so this is the Profit Playbook. This is my Discord community. So basically, the free chat, you guys have access to a lot of things, and I'll show you guys behind the scenes. So this is the main community chat where we basically have a lot of conversations about charts. I'll show updated analysis. I'll also screenshot the analysis that we took today and throw it in there for you guys so you guys can revisit it and like not have to rewatch the video. I don't mind if you rewatch the video because it's more views, but trade recaps, weekly outlooks. Again, I'll post things in here as well. So if anything, like anytime the bias changes or anything like that, like updated analysis. But really here is really the benefit of being in the community. And this is the lab section where I am basically calling out things for you guys live in real time, right? So you can see voice. And so what I'm so voice notes, screenshots, and then we also go live in here 3 times a week. So this is the actual room where we are live every day, right? So basically for the general chats though, I post updated analysis, right, throughout the week if my bias changes. So I'll lightly go over the charts, but a lot of the price action and a lot of the actual entries, exits, and things like that, I will only really talk about for my mentorship students in the lab. So you will have access to that if you're like a mentorship student, right? So, um, and this is really the value I'd say in addition to the course. So the course obviously lives on a separate website on the Whoop site, um, or WAP. I don't know if it's WAP, Whoop, WAP, right? Like I don't know what it is, but basically that will live on a separate site where y'all can get access to my actual like hours of teaching where I teach you guys how to read the concepts and things like that. But that's the other benefit to being in the mentorship is that, and then the additional weekend calls that we do every Sunday. So every Sunday I hop on and I just really use that as office hours. And I'm like, yo, what are y'all struggling with? How can I help you guys? Where do we win last week? Where do we mess up last week? And I'll break down my own trades, but I'll also break down like problems that they're having as well. And it's transparent, right? I take losses in the market just like everybody else does. And I'm pretty transparent about that. And it's hard not to be when you trade live most days. So I talk about what went wrong, what did I not see in that time that I'm seeing now or that I saw after the trade, right? Emotionally, how was I? We'll talk about it, how to manage psychology as well. So that type of thing. So I think the benefit, the general chat is awesome. And for some reason, the link to the free chat isn't working right now. So I would say if you're interested in just joining the free chat to see what's going on, message me on Instagram at Brinks Trades. And I'll have a link. I'll actually have a link to my Discord. I'll probably post it after the call too. So if you just want to see what's going on in there, you can. But I definitely think there's a lot of value being added, especially from a psychology standpoint, right? I don't see a whole lot of people that talk about that. Targets are global X traps. I don't know what you mean by that. I might just be having a brain fart, but whatever. Gold's looking pretty bullish, bro. You think it's gonna go higher? Yes, we actually talked about gold. I'll pull it back up. Here. Basically, I projected I think it's gonna go higher. Gold tends to move crazy in times where there's instability, right? And it's a very like common logic, right? Like a lot of people are scared of the dollar and they're scared of what the dollar's going to do. Right now, the dollar's tanking. And obviously it's XAU USD. So they have an inverse relationship. One goes up, one goes down. But gold specifically moves in times where there's instability, right? And people are scared. So they take their money and put it in the gold, right? And it drives the value of gold up, right? So that's the point. That's the reasoning here. So I think it's going to go higher. I can't bet against it going lower. The worst thing you could do as a trader is pick a top, right? Because you're trying to short something that's just not ready to go down yet. So you have to let it play out. So let me go back here. Yeah, it's okay, nice. Yeah, it's like I said, it's a really good value. I think it's a lot of things that I would have wanted when I was learning how to trade, as far as getting a community together and really people that will work with you one-on-one and kind of do that stuff. So I can't say that the attention will be as great as the group grows, but as of now, it's a relatively small group and I keep it like that. I don't ever really want to be over a couple hundred people, to be honest with you. But there's not that many in the chat right now, so to be honest. Okay, so yeah, so like I said, I think gold's going higher, like I mentioned before. So I think that's all the questions that we have. But yeah, I mean, I would stay locked in with me. At minimum, stay locked in with me on social media. At Brinks Trades, you see a lot of content go up there. I'm gonna have a lot more YouTube content going up this year. This is obviously the weekly call, but just little tips and tricks about insights and things like that. So if you guys have any issues at all or questions at all after the fact, just hit me there. So it's been cool. Hope y'all get a lot. Go outside, touch grass. I'm in the Midwest. It's a really good day outside. I'm gonna enjoy this and go watch go to an NBA game later. So I hope all y'all have a good rest of the week. And yeah. Catch y'all next week.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex, indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.